Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw some selling pressure in the markets. The spiders actually put in the S&P 500 an engulfing reversal candle, a very bearish signal on the charts. Three major indices were negative today, but SMH kept everything afloat. Good news on AMD. We'll get to that here in a little bit. But we do have some earnings today with Visa, Starbucks. Tomorrow morning, we also have Vertiv, Altria, Kraft Heinz, and Etsy, followed by Wednesday afternoon. Some big heavy hitters start reporting. This is earnings season, folks. I love this time. Tons of volatility. That means opportunities for technical traders. Wednesday afternoon, we have Meta, Microsoft, Hood, Carvana, Ford, as well as QCOM. So a lot ahead of ourselves. Plus, we got the FOMC meeting results tomorrow at 2 and 2:30. So, guys, lots of stuff to pay attention to. Let's jump into the market summary board to see where everything panned out today. So we see the Dow Jones down 0.45%, Nasdaq down 0.39%, S&P 500 down 0.33%. U.S. oil's popping up nicely, almost negating this bear flag we've been watching, now up 3.63%. Gold is up 0.3%, not too much to report there, and Bitcoin is down 0.43% on the day. So let's jump into the S&P 500 heat map. And as you see here, we've got some of the big players falling down. NVIDIA down 0.81%, Apple 1.35% down, Meta down 2.17%, Amazon's down 0.79%. And then we get over here, we see Eli Lilly down 5.4%, Tesla's down moderately 1.25%, Booking down 1.73%. Basically a mixed bag, as we're not down tremendously on the market, but still we are down, and it's significant because of what's going on here on the S&P 500. We've been talking about this inclining parallel channel. No need to scroll back on it. We've seen it probably about 100 times already during this show, but you notice we're ever so close to that trend line. We didn't even tag it today. However, look at this candle. This is a very bearish candle on the charts. We have an engulfing reversal candle. What that means is price gapped up today and then finished the day beneath yesterday's candle. So it wiped out all of yesterday's trading as well as the day before, and we have price now closing underneath this area and this range. So what does this mean for the S&P 500? We already know it's extended. We are due for at least a 2 to 5% pullback. If we do start this pullback from this engulfing reversal candle, we will come down here. Next support is going to be at 61.46 on the SPX. Notice on these other big red candles, they weren't engulfing reversal candles. We closed here all within the range of the price action before, and then this candle did not open up above the previous day's candle. So this is the first major sign that something is about to change. Then plus two, look at the selling pressure that occurred today. We had a beautiful gap up on the 10-minute chart, and then really we sold just about all day. Notice this pattern with we have falling price action and sideways consolidation is a bear flag. And then it resulted in further downward price movement right at the end of the day. So bearish price action today, no doubt about it. Into the Qs. The Qs also very similar situation here, except for closing. We have not yet closed. We'll be closing in about a minute. We very well may put in an engulfing reversal candle here on the Qs as well. Something to be watching for. Pay attention to this close here in just about 50 seconds, as that should also be an extremely bearish signal on the charts there for the Qs. Next up, the SMH, the one fighting and lonely star shining today, as you see here, up 0.46%. And a major reason for it is AMD. AMD really pushed higher today on the back of their new Threadripper 9000 chip that's apparently supposed to be coming out towards the end of this month on July 31st, priced at $1,500. But then they also do have a price increase on their Instinct MI350 AI GPU. Now that 70% increase is really going to be driving funds. We'll get into that AMD chart here in a moment, but really that's one of the main reasons that SMH is staying up higher on this chart. Now notice yesterday we did close into this parallel. Today we're going to confirm it, but this is a very weak confirmation from what I'm seeing here. We'll have to see tomorrow. Are we going to continue trading in that parallel, or if we start breaking down? This is a very weak confirmation since we barely had price close in on the day before. Next up, the IWM. IWM really chopping around, albeit down 0.64% today, still consolidating in this range. Now, keep in mind, if we do see bigger pressure on the stock markets, we likely are going to start seeing even more pressure on small cap stocks. Small cap stocks can move 20, 30% nearly in a day or two. So be wary and be careful for any small cap plays that you do have. Make sure you go light. That enables you to maneuver through that position and get a good average once that support level is hit for that bounce. All right, so next up, we've got Bitcoin. Bitcoin, really not too much to report here. Same analysis that I've had on the previous days. Looks like we need to start rolling over a little bit on Bitcoin. First major support, 113,641, followed by the inclining 50% area of the parallel, roughly around $110,000. Next up, gold, not too much to report here either. Gold did retreat back after tagging this declining trend line. Area of support that I'm watching is going to be this inclining trend line, currently priced right around 32.86. Next up, silver, also not too much to report here. We're putting in another doji candle. Yesterday had a doji. Today's got a doji. It's showing while there's equal buyers and sellers taking place on both trading days yesterday and today. Even though we did tag that area of resistance and had a decent fall on silver, buyers are eager to step up to the plate, thus pushing price up as we see here on the charts. I'm not interested right here. I'd be interested in between these areas at 36.58 and 34.86 for a long on silver. Next up, U.S. oil. As I've mentioned, we're looking like we're trying to fight out of this bear flag pattern. Haven't done it yet. And notice where price caught resistance today on this declining trend line. This is what we would call a hidden trend line, because you see here, if I scroll back out on the chart, I took it from a major pivot high and connected over to the next significant pivot point and connected on the way down. We notice price excelled through the trend line here, and then it did so again, yet this trend line is still working as we see price action getting rejected, today's price action and closing now underneath it. Still, all in all, that's a great move on oil, but that doesn't change the current pattern that's still showing on the chart, which is a bear flag pattern. We'll see if we gap up tomorrow and move higher. If we do, then this bear flag pattern is in jeopardy of being negated. So far, bear flag pattern still tells me price action should be coming down to the $60 area here on U.S. oil. Next up, nat gas. Nat gas didn't really do too much either today, still consolidated in this range. That tells me this is a bear flag now forming and maturing. Should we have more days of consolidation, about 2 to 3 more days, that will mature out, and then we'll be looking at these next levels of support at $3 and potentially all the way down here at $2.55. Next up, we've got the dollar, US dollar index, DXY daily. We mentioned this the other day. Notice this inverse head and shoulders pattern. And then right now today, we have closed above this neckline, this declining trend line that you see here on my chart. This does have a measured move up to 101.41. Let's see if we get a confirmation tomorrow. Great breakout here on the index of the US dollar. Next up, AMD. As I mentioned, they have this new chip that's coming out, plus they're increasing their costs. So a lot of investors just continue to pile in. One thing I want to point out, notice the severe overbought situation here on AMD. And then also, if I scroll back out on the chart, since the April lows, AMD's pushed up an impressive 130%. Time for some cooling off. Even though we did a little bit here, we need to have some more consolidation in upwards of a week or more, much like what occurred here. Notice that bull flag pattern. We need to start doing that again. We need to have stair steps on the way up. Otherwise, this steep vertical climb is vulnerable for a pullback. Support level being at 157.91. Watch resistance tomorrow if we push higher with this euphoria at the 187.25 level. Now, next up, UPS. UPS, as you see here, big sell-off on the news of earnings that was reported. The earnings was a mixed bag. They beat on revenue, but their earnings missed on earnings per share by 0.83%. Now, the big news here is that UPS is cutting 20,000 jobs, all right? 20,000 jobs being cut and hundreds of facilities being closed, mainly due to the reduced volume from shipping through Amazon. So Amazon, as you know, has deployed their own trucks. And so this is starting to hurt UPS. Notice here on the chart, guys, that's a big red candle. Not good for future price action on UPS. However, we did catch support, and let's show you where we caught support. We did catch support right in this area. That's where price at least stopped today, closing near the bottoms. A close near the bottom also does imply the selling may not be over yet. If that's the case, watch this declining trend line and notice how that intersects with a great support area down here at $82 on the chart for UPS. Next up, PayPal. PayPal reported earnings also. Notice this huge gap down that occurred on PayPal. Now, PayPal had a double beat, so this was a little bit curious. They did have some good reporting coming out for usage of Venmo. Venmo numbers are doing well, and so PayPal, though, is just getting slammed off of earnings. Sometimes this happens, especially considering, look at the nice move up we've had since previous earnings when we were here at $64, got up in the high $78 range, and thus now breaking current trend, gapping underneath this. If selling continues tomorrow, next area support down at $67.68. However, this sort of candle showing that we have nice wicks on either side insinuates potential consolidation over the next couple days, but then still be eyeing that 67, 68, as well as this inclining trend line just beneath that at $66.78. Next up, SoFi. What a great move on SoFi today. Also, as you see here, beating both on earnings per share and on revenue. Price action opened up here, $23.13, ran straight into resistance at $25, then retreated here on the chart. If I scroll back out on the daily time frame, you'll notice we do have some pivots right here in this range of the $25 high. Thus, this was a great area for a short opportunity intraday. Plus, we've got overbought situations all stacking the deck in favor for a little bit of drawback after that huge explosive run off of earnings. Fantastic move. If the selling continues tomorrow and into this week and next week, watch this inclining trend line for support that will actually line up as a gap fill here, roughly at $21.02. Next up, AVGO. Bringing AVGO to your attention today because, guys, what do you see there on the chart? What do you see right there? That's a doji candle. Dojis typically represent an equal number of buyers and an equal number of sellers. So that's an indecision time frame. Plus, let's look here at the RSI on the chart. We already know touching 70 again. If I flip to the weekly, we're above 70. That's an overbought territory. Doesn't take too much to see that this is an extended move on AVGO, albeit impressive, very nicely done. It looks like, at least for the time being, we're starting to get into a period and to an area that likely will start seeing some selling pressure, some investors taking profit while the price has moved up so high here on the chart. This candle could start and kickstart that selling pressure. We'll see in the coming days. Next up, GLW, Corning Incorporated. As you see here too, had earnings this morning and had a double beat. Great move on Corning with GLW. As you see here though, on the chart, this is a slightly, it's not necessarily equal spaced. However, this still is an inverse head and shoulders pattern. Very small shoulder here on the right and kind of an awkward shoulder on the left. Ultimately, though, that does give us a target up here at $66.75. Great move of 11.86%. We'll see if we get some consolidation over the next few days. But then if we do, this target becomes ever more clear up here at $66.75. Next up, CYBR. Now, CyberArk, look at this explosive move. No earnings to report here. However, Palo Alto is now in discussions for acquiring Cyber for $20 billion. And so Cyber, if you see here, the market cap of it is listed here at $21.85 billion. But investors love that news and push price straight up here to the top end of this inclining parallel channel. This is to show you guys a couple things. And this is a great teaching moment. Whenever there's news of a potential buyout of another company, the company getting bought out likely will have their stock move in a positive direction. The company doing the buying usually gets hit, and they get hit because they're acquiring debt from the other company. But back into technicals, look at this inclining parallel channel that we have here on the charts. This inclining parallel, it provided insight as to where price was going to stop today. Other than that, there was no other level that really got to this area for hitting the brakes on price action. Learning technicals, learning how to draw parallels will help you excel as a trader. It gives you ample information about how a trend line is going to operate with price, what the price is going to do. If the price does break that area, it also tells you how strong that stock is too, particularly breaking to the upside. Plus, with these parallels, we get three lines. We get the top, the bottom, and the 50% area. You get loads of information in here with parallels. Learn how to draw parallels. We teach those here at Verified Investing, one of which with my course, Mastering the Overnight Trade, the Sleeper Hold. We go straight into trend lines, understanding how to find great levels like this. It's amazing being able to predict where price is going to stop on a chart in the future. And it happens over and over again, guys. It's powerful stuff. So what I had mentioned before, Cyber is in discussions of being acquired, and they're looking to be acquired by Palo Alto. Look at the reaction on the news here with this sort of sell. So Palo Alto is getting larger, and they're interested in developing more cybersecurity, which is great, right? More security with new technological advancements should be only good for the consumer. But with this news of the acquisition over cyber, this stock really did take a decent hit today. However, it's not broken down, still remaining in this trend. If you notice here, we basically kissed that area. If I move this trend line up ever so slightly, you can see we didn't hit it, but we just kissed this area of support. We'll be watching for Palo Alto's potential bounce tomorrow. If we do gap beneath this trend line, the next support is at 185.08. All right, guys, as I said, earnings season is amongst us. Great time to be a trader. I'm happy to bring you some good levels to give you guys all the ammo you need for the trades in the near future. Look forward to being back here tomorrow. Until then, I'll see you guys on the charts. Take care.